Hello viewers, after a long time we are going to discuss about Syrma SGS Technologies IPO. We are going to see the objective of IPO and what are their strength, financial strength and weakness, and IPO details, and finally we'll compare with their peers and then we'll see whether we'll apply or not. Welcome to our channel Stocks in Silence. First, let us see what is the business. Syrma SGS, which was incorporated in 2004, they are involved in the business of electronics manufacturing services, that is called as a EMS in short. This is Chennai-based engineering and design company. They specializes in precision manufacturing, that we call it as a designs that require highly accurate components, and caters to various industries such as industrials, automotive, healthcare, IT, and consumer products. So this is their business. Now let us see what is their production capabilities. They have 11 manufacturing facilities in all over the India. In North India, they have factory in Himachal Pradesh, Haryana, and Uttar Pradesh. And South India, they have factory in Tamil Nadu and Karnataka. The manufacturing facilities in Tamil Nadu are located in a special economic zone. We call it as a SEZ. The manufacturing facility in Haryana has been set up under the Electronic Hardware Technology Park scheme, which allow the company to avail tax and other benefits. They have in South India SEZ and in North India Technology Park. So this gives some tax exemption for them. That is the reason they have the manufacturing facilities in those places. We'll see the R&D capabilities. The company has 3 dedicated R&D facilities, 2 of which are located at Chennai and Gurgaon, and 1 in Stuttgart, Germany. So they have 2 R&D within India and 1 in outside of India, that is in Germany. Let us see their products. Their main products are PCBA, that we call it as a printed circuit board assemblies, which are used in automotive industry, medical, industrial, and the IT industries. Then one more product is RFID, that is called it as a radio frequency identification, which are used in shipping, healthcare, manufacturing, and fintech industries. In addition to that, electromagnetic and electrochemical parts, which are used in automotive, industrial appliance, and consumer appliances. Then memory products like DRAM modules, that is dynamic random access memory, that is part of the chip, so that they are manufacturing. Then USB drives also they are supplying, they are manufacturing. So we call it as a memory products. Other products apart from PCB, RFID, and electromagnetic and memory products, they have some other products. We call it as a motherboards, SSDs, USB drives, etc. These we call it as a other products. So who are the promoters of the company? The promoters of the company are Sandeep Tandon and Jasbir Singh Gujral, Veena Kumari Tandon, and Tancom Electronics Private Limited. The Tancom is having the reasonable share in this company, so those also one of the company promoters we can call. So promoters collectively hold around 58.78% of the equity share as of December 31st, 2021. So we have seen the promoters details, and what are the objective of the IPO is funding capital expenditure requirements for the development of an R&D facility and expansion, and setting up of manufacturing facilities. I hope that they may expand their manufacturing facilities in other places too. And second reason is funding long-term working capital requirements, then other general corporate purposes. So we have seen what is their business and what are the products and who are the promoters and then objectives. Now the important part is financial status. Let us see last 3 years how the results and what is the assets. So let us see first the assets. In March 19 the asset value is 286.42 crore, then March 20 it become 346.7 crore, then March 21 it become 460 crore. So total asset is keep on increasing year on year. In total revenue when we see 357.4 in March 19, then 404.88, almost 405 crore in March 20, then 445 crore in March 21. So total revenue also increasing. Profit after tax March 19 20.97, that is around 21 crore. Then March 20 43.88, that is 45 crore. But unfortunately in March 21 the profit after tax is decreased, that is around 28.62. This is notable point. Let us see the other comparison, then we'll conclude. So now we'll see the IPO details. The IPO already came in last Friday, that is August 12th. It will be there till August 18th because Monday is holiday due to Independence Day. So it will be available till Wednesday, that is August 18th. The Syrma IPO face value is 10 per share. IPO price is minimum 209 to maximum 220 per share. One lot size is 68 shares. And issue size is, we have seen that aggregating up to 840 crores totally, that is share value is rupees 10. It's a fresh issue. Offer for sale, it comes with a rupees 10, so totally 33 lakhs 69,360 shares totally. The type of issue is book built issue. It is going to be listed both in BSE and NSE. QAB shares is not more than 50% offer. At the same time, for the retails, it is not less than 35% of the offer, because who are going to apply, I feel that they may get the chance to allotment, because they are saying that not less than 35% for the retails, and NII and HN1, that is not less than 15% of the offer. So we have seen the IPO details. Now let us see what is their production capabilities. They have 11 manufacturing facilities in all over the India. In North India, they have factory in Himachal Pradesh, Haryana and Uttar Pradesh. And South India, they have factory in Tamil Nadu and Karnataka. The manufacturing facilities in Tamil Nadu are located in a special economic zone. We call it as SEZ. The manufacturing facility in Haryana has been set up under the Electronic Hardware Technology Park scheme, which allow the company to avail tax and other benefits. They have in South India SEZ and in North India Technology Park. So this gives some tax exemption for them. That is the reason they have the manufacturing facilities in those places. We'll see the R&D capabilities. The company has 3 dedicated R&D facilities, 2 of which are located at Chennai and Gurgaon, and 1 in Stuttgart, Germany. So they have 2 R&D within India and 1 in outside of India, that is in Germany. Now let us see what are their strength and what is the weakness for this company. First, let us see the major strength. They have the strong customer portfolio. They have 200 customers in its portfolio, which they have 16 have stayed with the company for more than 10 years. Wow, that is really good. They also have some major clients such as TVS Motors, AO Smith India Water Products, Robert Bosch Engineering, Business Solutions, Eureka Forbes, Cyan Canode, Atombug Technologies, HUL, and then Total Power Europe BV. So these are their regular customers, and as I mentioned that there are 10 years they have association for these 16 major customers. This is a good point for the company. It looks they are delivering and they are maintaining their customers very well. Second strength is manufacturing capabilities. They have 11 manufacturing facilities in India itself, and that is a good part for the company. Third important good part is the inorganic growth. Inorganic growth is the acquisition of the other company. They have acquired Tovia Automation in 2014 and then 3G Communication in 2016, and more recent acquisition of SGS Techniques and Perfect ID in 2021. So this we call it as in industry, we call it as a inorganic growth. They are keep on acquiring and making acquisition with other company to grow the business. So far we have seen all the strength, and in terms of weakness, yes, that also we have to be noted down. Even though the revenue of the company is increased, the margin have been falling consistently in last 3 years. So that we call it as a negative part, but it may be due to the higher cost for their raw material, because after COVID in any industry the input cost is kept increased. So that may be the one of the reasons their margin has reduced when compared to others. That we call it as a small negative, but we cannot say as a fully negative. But let us see if it is continuous in future also. Either they have to increase their product price, or they have to find out where they can able to get the low price raw materials and other details. So finally, the competitive industry, this business is open to anyone. There is no moat system in this business. So if any big players or anybody can start this type of business. So in that way, we can say there is no competitive to start this business. So that also slightly weakness in this. So strength in the sense strong customer, good business, good manufacturing facility and R&D facility, and they keep on acquiring. Those points are all are called it as a strength. Weakness in the sense only margin is reduced because of input raw material cost, and then it's a highly competitive industry. So finally, we'll sum up. Before sum up, based on the data, if you ask me personally, I am more interested to apply for this IPO, because based on the financial data, based on the business, it looks attractive to me. But whether you are going to decide or not, you can decide based on the data what we have discussed. Finally, we'll ask ourselves some few questions. That question also will give the clarity whether we'll apply or not. The first question is, are the companies earning before tax more than rupees 50 crore in the last 12 months? The answer is yes. The company's consolidated earning before tax for financial 22 were 81 crore and 111 crore based on the pro forma financial statements. The second question is, does the company have high repeat customer usage? Yes, absolutely. They have 16 customers have been associated with the company for more than 10 years. Third question is, does the company have a credible moat? The answer is no. We have seen this business can be started by anyone, even though the company is involved in precision manufacturing and is a leader in high mix, low volume production. There are other domestic and international players who offer such services. Fourth question is the stock's price to earning less than its peers median level? Yes, the company will trade at a price to earning level 17.6 times on a consolidated basis and 50.7 times on pro forma basis against peers median level of 79.4 times. So P ratio is average for the peers is 79.4, for this company 71.6. That's a good part for the company. Final question is the stock's price to book value less than its peers average level? Yes, the company will trade at a price to book value of 2.9 times against peers average level of 13.1 times. So when compared to other peers, their book to price to book ratio is higher. That is not good, but Syrma SGS Technologies price to book value is low. That is good for the company. So overall, it looks very attractive to me. I hope you understand that. Now, based on the data, you can decide. Thank you. Bye bye.